Wow, a strong drop in gold and silver. The question is, shall we buy it now because it's cheap, or should we stick with the bears here? Can we expect more to come on the downside? So the chart is giving us maybe an answer for that, at least what the market participants are thinking here. So stick with me and have a closer look at the charts and check out what the market should do next. Yeah, well, the market should do next. That's a question indeed. Is it really possible to read the charts and say what the future is bringing? No, of course it's not. The future is, of course, unknown for everyone, also for us chart technical traders. But the charts are telling us what the market participants are thinking currently. Are they in a bullish mood? Are they in a bearish mood? Are they panicking? What is the idea behind the current market movement, the market situation? And when the market participants are in the good mood, everything will go well. And if they are in a really bad mood, then we need a lot of strong power for the other side to bring the market back on tracks for the bullish market, for example. So let's have a closer look now at the chart and see what we've seen the last week. And this is really impressive because the market dropped strongly. And you could see we had a strong support level here, which is made of some supportive Fibonacci levels, symmetry levels, even the last lows we had here the last few days. So here around this level we had a strong support level. And this is not saying us that the market necessarily needs to turn. This is saying as many market participants will have a closer look at the market here. Do I need to stop my position because I'm long here and placed my stops around this level? Or can I buy now because we're on a support level? Whatever it is, there are so many reasons to have a closer look at this level. So it's really important to see what the reaction is. Some people are trying to get long, have long positions at this level. I'm not doing this. I always want to have something like a supportive movement that is confirming that the market is really turning. This is not happening here. We can see that the market went through strongly. So if you place a long position here, you will be stopped out, hopefully close to this level. Normally, if I would do this, I would place a stop limit quite close below there, because maybe the market is turning, okay, then it will have a good risk-reward ratio, or the market is not turning. That's a pity, but nothing to worry about, because the market, if it is not turning, can go far away, but it's only a small stop we had to suffer here from. Okay, so the next support level was a really weak one, so nothing to mention. The next one was a little bit stronger, but even nothing to mention. But now we have the last one here, which is giving us a better indication that the market has a chance to turn here. Maybe, I'm just curious, I did not check this. I can do another one, for example, here with, you can see here the counter movement and have the Fibonacci extensions here. And you can see this also leads us to a supportive level here, roughly around this level. And of course you can do this with this one, but this will more or less lead us to the same level here as well. So yes, indeed, after pushing through these levels, we can take them out because they are not too strong and they have been broken already. And this one, I could turn it out, but now we have the next one. And currently, other than at this level, the market at least holds a little bit. Okay, we have weekend ahead, so it was sure that nobody wants to do too much action here in front of the window, the weekend at the time not trading. But when the market is now going through these lower levels here, this is a really bad indication, because nobody wants to buy this market. If the market after the weekend turns around a little bit, I would definitely check what kind of movement you will get. So what two kinds of movements can you expect? The first one is something like this. This would be a really nice one, because of many people are saying, yeah, but I cannot know this ahead. Yes, of course, you cannot. You have to wait for this one. But if you see this one followed by something like a corrective pattern here, you can imagine that this will give you another part to the upside, because normally the market is following the strong side. But before this, you need to have a strong side, which can happen here at this supportive level. So if you get this in the next few hours after the break, leaving this zone here, followed by a corrective pattern to the downside, you can expect and you can trade this one when going through the intermediate high here, something like this, pushing through intermediate high in this case, which can be a trigger. This not necessarily leads you to the highest peak you can get. You had similar situations maybe here, not this one here. It was more or less this one, for example. It could be this one. Both leaded higher and you had a chance to trail your stop. Maybe you took your profits here, but if not, maybe you had a small loss, or you don't necessarily need to have a loss, because the stop level could be this level here as well, because this is if the market is overlapping on an upside mark, you can close the position, and both entry levels have been lower than that, so you wouldn't have a big profit, but it was as we said, a green zero, so it was just to have a small, let's say, an ice cream or something else out of the market. But this is giving us a good idea when the market is pushing forward really strong, really softly, really corrective, in an overlapping pattern. Sometimes it might be something like an A, B, C pattern. Then you can expect that the market will continue to the upside once more. So let's take off this chart idea. The next one, if the market is not turning around in a strong manner, like I've mentioned before, if the market is turning around, but is going in this way, this is not the best opportunity to buy the market, because in this case, the strong movement is still to the downside, and the up movement is still something in a corrective pattern. You can see it. You can draw some trend channeling maybe. If you get something like this, if it's not like this, you can alternatively get something like an ABC pattern. It could look like this, for example, in an ABC pattern. Whenever the market is plunging through this level again, then you have a chance to continue the market to the downside. So it's really, really important to see what the market is bringing us next. Is it a weak move to the upside, or is it a strong move to the upside? This is the first we have to check after the weekend in the next few trading hours. But you can also apply this idea at any time. It's not only in this situation. You can have this in any time, in any time frame, also in a lower time frame as well, if you prefer that. No worries at all. Okay, so we've talked about this one. What happens when the market is going straight through this? This also can happen. So these three opportunities you have. If the market is strong to the upside, shaky to the downside, you are on the buy side. If the market is weak on the upside, you are going to sell the market. If the market is plunging, maybe you could not enter at that very point here. The market, you missed this opportunity. Most of the time you miss the first opportunity because you take this as something like a proof, not a proof, but something like a confirmation for the market idea. So if the market is doing this next, followed by, it's exactly the same. If the market is doing this here, okay, you would sell short the market. If the market needs some more time and is continuing to the downside, and after that is giving you a corrective pattern to the upside, then you can sell short the market. So you can see that these levels with many Fibonacci levels here clustering around some really tight area, this gives you a good idea to check the market a little bit closer and wait for a strong movement or a weak movement. Okay, that's for the 4-hourly chart. Let's switch to a 1-day chart in this case, to the daily chart. You can see the overall picture here, and this was the last drop you've seen here on Friday, which gave us the bearish momentum. Before that, I saw a real chance that the market finally will go up to this level here, which would follow the idea that the market is in an A, B, something like a C pattern here, which is an ABC pattern, a corrective pattern, and you can see it's roughly the same like I've talked before. Strong to the downside, something like an ABC pattern, and you can see that this part before that should continue after that. So best chances for a continued bear market here, you can see that the chances are quite good. But instead of going to this level here, which is roughly this one, the market plunged before. So this is increasing the chance that we are already on this movement here. So now it depends very, very much whether we get something corrective to the upside to have exactly the same idea. A strong move to the downside, some counter movements within the downtrend, strong move, something within the movement, and some continuation here to the downside. Why this? Do I really think in an environment of inflation and the fear of inflation that gold price will drop as much as I mentioned here, which is 1650 roughly? Yeah, well, on the longer time frame here on the weekly chart, you can see that we have still the chance that the market is dropping even below 1650. We have a chance that the market is also going to the 1600 or even below that a little bit. And this is still not something to fear at the long-term bull market, because this pattern is something we've talked about on the lower time frames, which is an ABC pattern after a strong movement to the upside. So I'm still bullish on the long one. But I don't think it's a good perfect time to buy gold at the current moment, as long as the market is pushing downwards as strongly as we've seen here before. So my preferred picture is now that we will move there first, at least plunging through this level, which is roughly 1680, roughly a little bit below that, and more or less into this area. Maybe you can read these numbers. It's roughly around the 1600 level, which would work perfectly with a chart technical corrective pattern situation. And after that, we can await something like a really strong bull market, because the market is in a bull market, and after some setbacks should continue to the upside really strongly. So that's it from gold from my side. So expect some continuation to the downside. Maybe there's still a chance. There's not 100% over. I'm really sorry. There's really the chance that the market is still in this pattern. We had a first strong move to the upside. We now had a really strong down movement. Some people would say this could be something like a sideways correction, could be a double sideways. This is Elliott wave name for this chart technical pattern here. And when the market is moving here, maybe we still reach this level, maybe a little bit below what I've drawn here before, but roughly around this level again. It can happen. It would not destroy the overall picture of a still moving lower, but it still should reach around this cube here and or this square, and wait for lower prices here in the aftermath. So I think this is the best idea you should expect here. Check whether the market is going strong to the upside, weak to the downside, then you can buy. Otherwise, in all other scenarios, if that is not happening, the gold market is still a sell in my eyes. Okay, let's switch to silver, also compared to the US dollar, of course, and you could see that also here we have seen in the 4-hourly chart a really strong, a severe drop here, and the day was a really bad one on Friday. And yes, this is of course killing all the bullish ideas. However, the scenario is a little bit different in silver. Before we go to the lower time frame, I think we should start with the overview in this case, which is giving us on a weekly chart a good impression that this is a really strong movement. We came down, and here in this part of the chart, we are in an uptrend, yes, and some people are thinking, yeah, great, we can expect the market to continue to the upside. Well, that's not expected. What I expect here in this market situation, what I expect here is that this is a really weak uptrend. You can see we have a lot of overlapping. We have not the best situation here in a bull market. I would call this a counter trend movement, which is a corrective pattern. So we can expect something like this again here. And you can see that more or less this is exactly fitting into the gold picture, expecting some further drops. And when the market is doing like this, I'm not 100% sure where it leads to, but I think we have a good chance that the market will reach roughly this region again, maybe undershoot this, so market going below this level, which is roughly around about 21, 22, something around like this is what I expect with this market. And this would perfectly fit into this bearish market we have here, because you can see that the market on a lower time frame, maybe it's even better to see in the daily chart, that we had some strong movements interrupted by some ABC patterns, strong movement, shaky pattern, strong movement, shaky pattern, strong movement, shaky pattern, strong movement, ABC pattern, strong movement. So you can see we have all the time, we have strong movements to the downside and shaky to the upside. In this case, I had the chance, to be honest, that the market needs another one to the upside before continuing to the downside. So this is perfectly fitting, expecting something like this. It's the same like with gold, where I expected going to the square here first and then going into the continuation to the upside, to the downside here, leading to something like a 22-ish or whatever level here around that lows from late in 2020 or September or November, something around this level. Other than gold, because the market plunged through this level, the indication is a little bit different. Because this ABC pattern like this is nothing I would preferably expect in this case, but it can happen as well. So what I want to see now is the market going up strongly here? The same like here and here. Then after a break to the downside, we have to expect a continuation to the upside. If the market is doing something like this here, then I can buy this market. But I don't expect this. More or less, I expect something like a corrective pattern. But it's not about my expectation. I do what the market is giving me, whatever I expect. If the market is giving me a strong one and a weak one, I can trade the continuation. Sometimes you have to wait for some trigger, whatever. And sometimes it's not pushing really, really far, but you have the idea in what direction you need to trade. If you have a strong move into this direction, an ABC pattern into this direction, you can guess that the market first will continue the strong direction. So that's exactly the same idea behind this here. When the market is pushing strongly, and it pushed strongly, and coming back in an ABC pattern or in a more or less shaky way, no matter how many times it is going back and forth, but with overlapping situation. You can also, if you see something like a trend channel, and you can see within the trend channel the market was moving very back and forth very often, this is giving you an indication for that as well. So if you see this, the market is in favor of the bearish market in this case. Maybe on a 15-minute chart, we have to wait what the break after the weekend is giving us. But what I see here on the 15-minute chart, I don't want to dig too deep here into the low-term profile here. But you can see compared to this movement, if you compare this one, currently is not the best situation for buying the market. But this is before the weekend. Of course, wherever the market is opening after the weekend, if the market is doing this here, then of course this seems to be a stronger one, and we need to plunge through this level for a continuation to the downside. But if the market is staying within this range here, moving a little bit to the upside, don't overestimate the strength of this up move. It is more or less a counter trend movement, and the continuation should follow, like we've seen this very, very, very often before. So in this case, you can see gold and silver are really in a bearish mood. They can change this, but only if they really, really manage to move. No, not like this. If they move like this, or if not like this, you can say like this maybe. This would also work. You can see strong movement with only small interruptions here in the bull market, with only small setbacks here. This also would be a good move. And when then the market is coming down in an ABC pattern, of course you can expect that the market will continue here to the upside. But first of all, it's really, really crucial. We need something like this to be convinced that this will happen in this case. Of course, there is a gray zone. Sometimes the market is not giving us a clear picture. In this case, I will stay out of the market waiting for the next clear picture. And you can see we very, very often have strong movements and weak movements. If you don't know, stay aside. If you see that, if you can recognize these, then it's a good opportunity to enter the market, at least through our trading ideas we normally apply in this case. Okay, that's it from my side. Gold and silver in a really interesting market situation. It might be really difficult to trade for some people, but on the other side, if you see these strong movements and the weak movements, if you can compare these, this takes some time. If you're not used to this kind of chart technical idea, then it takes some time to train your eyes to do so. But I hope, and I cross my fingers for you, that you will find out. And when you follow these videos more often, hopefully you will get a clue how we do this in our trading situation here as well. So please stick with us, give us a thumb up if you like it, and have a good trading day. Bye bye.